All right, what's going on YouTube? I'm going to be putting out a short video, hopefully, just kind of quickly going over how I perform my analysis of the chart in order to look for positions to take during the trading week. Today's Sunday, so obviously markets are closed today, but I like to refresh and with like an open mind at the end of the weekend and sort of gauge the current direction of the market for the upcoming week. Go over whatever news events are going to be coming out. Like for example, I know this week we got what's it called? We got CPI coming out, so there's going to be a big market mover for the news, and it's very simple. I've gone into a little bit of where I like to take positions in the past, but a lot of it is based off of fair value gaps. That's really the only indicator that I have on my charts, as you can see. So right now, I like to start from the highest time frame. So I go ahead and look at the monthly chart, and you see we do have some monthly fair value gaps that have been created over the course of this and last year that are still there. Market's making new all-time highs, and as we go down toward the weekly, we see more buy-side gaps, and here on the daily chart, we're approaching a key daily fair value gap that's been tested before, and we've seen demand when the price retraced into it. So we might see another instance of support down here at this daily fair value gap, but we might also see the market push down lower because, like I said, we do have a lot of other gaps that I expect will be filled at some point. So we just keep on moving down the time frames here, and as I go lower, I start to get a mental picture of the prevailing trend at the moment. Obviously, there's the higher time frame trend, but within a monthly candle, right? You're going to have a lot of daily highs, daily lows, and within those are going to be a lot of different opportunities for you to get in and out, either short or long. So it's important to keep for me. I think it's important to keep the higher time frame in mind when you're starting to zoom in on the chart. But obviously, the further away that time frame is from where you take your entries, you're going to see a lot of things happen in between what that higher time frame trend's going to end up doing. So right now, looking at the 4-hour chart, we see that retracement coming down here. I guess this is sort of a double top. It might be a little bit clearer to see on a higher time frame, like a 12-hour here. You see this sort of resistance around that level, and for a lot of people that would be a sell signal. For a lot of people, this would be a very strong buy signal here in this daily fair value gap. And so I sort of like to stay agnostic and recognize that both of these things could occur really. And what I look for at this point to determine whether I would go long or short is going to depend much more on the lower time frames, right? So we have the snapshot of what the high time frame market structure is telling us and where the draw on liquidity is, which right now, looking at the 1-hour chart, is definitely a draw on sell side liquidity. And so that's going to be the most significant, relevant factor that I'm going to be considering when I'm looking for a position, right? Is where the current trend is going. Right now, the price is going down. So, in a day or in 12 hours or whatever, there might be it may resume the prevailing higher time frame trend, right? So this is essentially this 45-minute chart or 1-hour chart or whatever is going to be a retracement essentially in what is a higher time frame bullish trend. That's one way you could think about it, and that's usually how I think about it. Now, usually what I do is you see this little rectangle that I have here. So what I will do with this is I'll wait for London session to start, and I will highlight the whatever range occurred within London session. So I'll start it at 2 a.m. and I will simply take this rectangle and I will use it to mark the highs and the lows that happen during London session. And that way, when I wake up, like it's just let's just say this was London session. It's not, but I would use this, and I'm like, okay, during London session, the indices were pushing lower, right? So I look at this high, look at this low, and then I pay attention to um, what happens after the open. So a lot of times, immediately after the open, depending on what London session did, sometimes you'll see an inverse of that, and sometimes you'll see a continuation of the London session trend. So it's just paying close attention to some of those inversions that occur and where the trend will reverse, and you'll see London session will create a lower low, and New York session opens, and then it goes back and takes the buy side liquidity. So it just really is a matter of paying attention and being patient and sort of getting an understanding of what those patterns that tend to repeat themselves look like. And from there you sort of are able to estimate what your odds are, right? How likely is this pattern to play out? How often does it play out in the past? And when you are trading during a very specific period of time during the day, like in or around the open, it makes it a lot more easier to estimate these patterns and what the probability is. So from here, I might go to one of the lower time frames, and if like right now we're approaching that daily fair value gap right here, and so really I would be, because the market is very bullish right now, even on the higher time frame. Although there is the double top, markets the market will push up, make a higher high, have a small retracement, make a higher high, have a small retracement, and that's what it's been doing since roughly October of last year or so, the end of October. And that's for the most part what I'm going to be, where my bias is going to be. I'm going to be more bullish than bearish. And that's not just from this current trend, but that's just historically, with stock indices. They're more likely to go up than they are to go down. And historically, that's just what they do. So I'm really more looking to be patient here until I see a move down into this fair value gap for that daily gap there. And as I wait for that, I'm paying attention to the retracements, right? So I'm looking to see what sort of moves are happening that are counter trend as this market pushes down into that key level. And so right now, right, we take a look at the 1 minute. And yes, I do go down to the 1 minute. I don't like to stay on the 1 minute because it is very noisy. A lot of times you get fake outs on the 1 minute. Hell, you'll get fake outs on the 5 minute, pretty frequently. But one thing that I like to pay attention is, where are the 1 minute gaps forming, right? So when you have displacement in price, and you have price pushing up in a way that it creates like a fair value gap, like you have right here, where the body of this candle separates the next candle's wick from the previous candle's low wick. So you see the high wick here and the low wick there, and the body of this candle has displaced price, in that nowhere in this candle was there an opportunity for people to buy, right? This candle, the sellers pushed the price down. There was not buying volume that was able to impact the structure on this chart. So the structure was sell side, and so you're seeing, that's where you can read and gauge the momentum, right? So if you can see that these gaps are forming, and the sellers are the ones in control, they're the ones that are pushing the price in a certain direction. That's where I'm going to estimate that the price is going to continue until I start to see a change, right? So once you start to see the sellers exhausted, right, all the selling volume is starting to equalize with the buying volume, and you'll start to get the market ranging like this, right? And so what you'll do, or what I'll do at least, is I'll take a note of the range that it's currently in, and take a note of the current low. And sometimes it's easier to go up to a higher time frame when you do this, like the 5 minute. It's a little bit cleaner to look at. So you take a look at that low here that this wick created, and then take a look at the high. You could use this high, or you could use the high of the candle that the displacement occurred on. Either one is fine, but I mean, even right now, you start to see an example of this where um, the sellers were exhausted, and it got down. The price was pushed down far enough for it to be viewed as a buying opportunity to enough of the people in the market, and the price starts to push back up, and you'll start to potentially see fair value gaps forming from buyers, right? So just like this is an example of sellers pushing price down in a way that they are the ones that are moving the candles down, and the price is going down. Eventually, once there's enough sellers that have left the market, right, the price has gone down far enough that the prevailing perspective amongst the people participating is that the price is good for buying, and you'll have more buyers step in. Sometimes those buyers were previously sellers who were just shorting, and now they've flipped their bias, and now the price is going to do the exact opposite, and you'll start to see green candles printing, right? So what you want to look for, and what I look for, is once I start to see a fair value gap form on usually a 5 minute, maybe a 10 or a 15-minute chart, I want to see a fair value gap form that is significant. Now, depending on what trade idea you have, depending on what area of liquidity you're targeting, if you're just trying to see this high get taken, you may not need to wait until a 15-minute fair value gap forms for it to be serve as a good confirmation for that trade. You may be able to take a 5 minute signal, because it's not that far away, right? The further your target, usually the more confluence you're going to need from the higher time frame charts. But as you come into the next 5 minute candle, you want to see the level that price is at. You want to see that level held, right? Because that's what's going to create that gap. If you see the price move up, and oftentimes right before the next candle comes, the price is pushed back down so that there is no gap created, that usually is a sign to me that the move up is really just a retracement or a rebalancing that is going to be followed by a resuming of that downtrend, right? So just like we had here, we had displacement. We saw the sellers were exhausted, a nice long wick there. A lot of people probably bought, and then we saw price start to move up. But at no point was there a fair value gap that formed within here. There might have been a little one. Even that might not have actually been an actual gap. But when you start to see these movements that are counter trend, the way that I can tell, or at least the way that I estimate when it is counter trend compared to when it is starting a new trend, is going to be if there aren't any actual gaps that are created. So I want to see that gap, and then I want to see price retrace into that gap. See, there you see it just was created. So now I want to see, price hold this level, maybe even continue a little bit, and I want to see a retracement into that gap, and it to respect it, and for this gap to act as a sort of support. So once I see that happen, that would be an example of somewhere that I would buy, right? Because at that point, you have the displacement, you have the imbalance that was created by the buyers moving the market, and once you get that retest and you see the support, just like there, you have a decent amount of market structure for you to base a trade on. You have somewhere you could set a stop loss right here. And you have, an idea of a target potentially for the next area of liquidity. And so that's really what it is. So that's what I'll look for. I'll look for these gaps to form and for these gaps to be respected, in order for me to have confidence in a particular trend, or the creation of a new trend, and for me to have a to be, in order for me to believe that the new trend isn't just a retracement of a sell off. And so it's a process, and I'm still sort of trying to find ways to keep from catching a falling knife, because that's obviously what you want to avoid. It's very risky when you're trying to buy the dip. Essentially, that's really what this is. But when you wait for more confirmation, right? You wait. There you go. Look at that. And you wait for that retest of this gap that's created, and you wait for that gap to be confirmed and to show that it is a valid level of support, and then for that current move to continue. So that's really all I do. That's my strategy. I use this for break and retest. That's pretty much what I've just described, and then also for breakouts. So if it is making a higher high, and it retraces down to where it broke out from, and then shows good support there, that's another area that I might buy. Uh, but that's in a nutshell. That's how I trade. That's how I look for my entries. So going into tomorrow, I'm gonna be dragging this box over to London session, and I'm gonna be highlighting the range that takes place there. And whenever I wake up and New York session hits, I'm gonna be looking for London session if markets moved lower during London session, and I'm looking to go short. I might look for a retracement into one of these sell side gaps, and then it to act as resistance if I was going short, or obviously if I was going long, um, I would be looking for what I had just described. So I'd be looking for that retest of a buy side fair value gap, and then continuation against whatever this trend was. And that's pretty much it. We do have a 1 hour fair value gap here, so you do want to be kind of careful when you're looking for that reversal, that you're not buying right as soon as it hits sell side resistance here. So like if you look at the 1 hour chart, it just wicked into this gap, and so it's a balancing act. It really is. So you gotta understand where the liquidity is actually going, and hopefully as I continue trading, I'll get a little bit more accurate. But until then, I just plan on being as patient as possible. And yeah, I guess that'll do it for this video. If you guys have any questions for me, or wonder anything else about how I trade, or why I trade a certain way, feel free to leave those comments down below, and drop a like, subscribe, all those things. And I'll see you guys later this week.